Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Fast Retailing Co. Limited quarterly report. Fast Retailing Co. Limited market capitalization of $872 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that Fast Retailing Co. Limited holds a significant advantage in their industry. Fast Retailing Co. Limited trades at a higher price-to-earnings ratio of 40 times and a lower price-to-book ratio of 0.08 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The company maintains a moderate leverage profile, with liabilities making up 40% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. Fast Retailing Co. Limited offers a diverse range of businesses and services through its various segments. At the core of its operations are the UNIQLO Japan and International segments, which manufacture and retail clothing for men, women, children, and babies under the UNIQLO brand name. In addition to UNIQLO, the company operates other brands such as GU, PLSD, Theory, COMPTOIRDESCO2NNARS, J Brand, and Princess Tam Tam. These brands cater to different markets and demographics, providing customers with a wide range of choices. The company also provides real estate leasing services, allowing it to generate additional revenue streams beyond its core apparel business. Furthermore, Fast Retailing sells its products through online channels, making it easily accessible to customers worldwide. Overall, the company's diverse portfolio of brands and services enables it to cater to various customer needs and preferences, solidifying its position as a leading apparel designer and retailer in Japan and internationally. Der Actionkurs von Fast Retailing hat sich in den letzten Jahren positiv entwickelt. Im Vergangenen Jahr stieg der Kurs etwa 18% für die lokalen Aktien und der Tokioter Börse und etwa 10% für die ADRs, FRCOI, seit December 2025. Eine wichtige Uranus haben dazu beigetragen, dass sich der Aktienkurs von Fast Retailing erhöht. Eins davon war die Veröffentlichung positiver Finanzergebnis und Prognosen im Oktober 2025. Das Unternehmen gab bekannt, dass es einen konsolidierten Betriebsgewinn von 56,43 Milliarden Yen erzielt hat, was einem Anstieg von 13% gegenüber zwei Geschäftsjahren souverän sprach. Darüber hinaus meldet Fast Retailing für diesem 31. August 2025 in den Geschäftsjahr einen Umsatzanstieg von 96% auf 3.4005 Milliarden Japanische Yen. Der Geschäftsgewinn stieg 136% auf 5511 Milliarden Japanische Yen, und der Betriebsgewinn erhöht sich 126% auf 5642 Milliarden Japanische Yen. Die robuste Leistung in Schlüsselregionen im Dezember 2025 trug ebenfalls zum Anstieg des Aktienkurses bei. Uniqlo International verzeichnet ein Umsatzwachstum von etwa 8%, wobei Nordamerika 22% und die EU 31% zulegten. Zusammenfassend kann gesagt werden, dass der Anstieg des Aktienkurses von Fast Retailing im letzten Jahr auf eine Kombination aus positiven Finanzergebnissen, starkem Wachstum und robusten Leistungen in Schlüsselregionen zurückzuführen ist. The primary drivers of revenue growth for UNIQLO can be attributed to several key factors. Firstly, the strong sales of fall and winter products have contributed significantly to revenue growth. Additionally, successful marketing strategies have also played a crucial role in driving sales. The expansion of UNIQLO's brand recognition and customer trust worldwide has further boosted revenue. Furthermore, the opening of new high-quality stores, including flagship stores, has provided a significant boost to revenue. The collaborative business with JD.com in mainland China has also been a major driver of growth for UNIQLO International segment revenue, which increased by 20%. The global brand segment revenue saw an impressive increase of 114%, although this figure may be subject to revision. Overall, the total group revenue increased by 15%. However, there are also several factors that have contributed to revenue decline. Weakening yen exchange rates on forward contracts for procurement purposes in UNIQLO Japan has had a negative impact on revenue. Higher royalty expenses in UNIQLO Taiwan have also been a factor. Furthermore, the theory business has experienced a decline in revenue and profit due to lackluster sales in the USA. Additionally, store closures have led to a decline in revenue for Comptoir des Cotonniers and Princess Tam Tam businesses. Net income and profit margins underwent significant changes in the recent period. On a consolidated basis, net income increased by 11.7%, driven primarily by growth in GU's net income, which rose by 20%. In contrast, Global Brands' net income declined by 14.8%. Profit margins also experienced improvements across various segments. The gross profit margin expanded to 55.2%, while the selling, general and administrative expense ratio improved to 35.2%. Additionally, business profit margins saw an increase in UNIQLO International by 2.4 points, and a notable improvement of 2 points in GU due to enhanced volume planning and inventory management. These changes reflect the company's efforts to optimize its operations and improve profitability. The company's debt level and interest expenses have undergone significant changes. The total liabilities have surged by a substantial 185.6 billion yen, indicating a considerable increase in the company's financial obligations. This is further reflected in the current and non-current financial liabilities, which have also seen notable increases of $142,395 and $43,291 respectively. The interest expenses have also witnessed a significant rise, increasing from 3,288 million to yen 3,634 million between 2024 and 2025. Furthermore, the financing activities net cash used has increased by 11,484, indicating that the company is incurring higher interest expenses. These changes suggest that the company's financial situation has become more burdensome, with a greater strain on its finances due to increased debt levels and interest expenses. The performance of various segments within a company has been analyzed, revealing both successes and areas for improvement. On the positive side, UNIQLO International has shown strong results, indicating a successful expansion into global markets. In contrast, two segments have underperformed: Global Brands and UNIQLO Japan. These regions have struggled to meet expectations, highlighting potential issues with branding and domestic market performance. There is no notable activity in terms of acquisitions or divestitures. The company has not made any significant purchases or sales of assets, businesses, or subsidiaries that would be reported under this category. This suggests a stable and consistent approach to business operations, with no major changes in the company's portfolio or structure. The company has a history of returning value to its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has consistently paid out a significant amount each year, with figures ranging from 73,911 million yen in 2024 to 84,986 million yen in 2025. This demonstrates a commitment to rewarding investors for their loyalty. In addition to paying dividends, the company has also engaged in share buybacks over the past 2 years. The amounts allocated for this purpose have been substantial, with 97,718 million yen spent in 2024 and 99,193 million yen in 2025. This strategy allows the company to reduce its outstanding shares and potentially boost earnings per share, further benefiting shareholders. That concludes the financial summary for Fast Retailing Co., Limited. Feel free to comment below, and I will be happy to answer them when possible.